Welcome back to the morning show here on Arise News. According to our guests, one of the monsters in Nigeria that needs to be faced head-on is a regime of high interest rates and its impending effects on the growth of the country, which the Central Bank of Nigeria is addressing with its new policies. Joining us now to speak on the deterrent to domestic economic growth in Nigeria and the solutions is Chairman of DLM Capital Group, Sonny Ayere. Good morning and welcome to the morning show.
Good morning.
Thank you so much for joining us today.
Thank you. Thank
now,
you.
we read your amazing article on the CBN's governor's silver bullet, correct?
That's what I called it,
All
yeah.
right. Can you break it down for us?
Okay. Well, I just think that Governor Emefiele and his team came up with something that no one had thought about, which was a way to solve the problem of very high interest rates in Nigeria. Now, prior to this new policy, as I'm sure you all experienced it, right? If you went to a bank, loans were what? 27, 30%.
Yes. Interest rates are very high.
Now, think about it from any rational economic perspective. As a business person, how do you make a profit? Or how do you make any rational business work with that kind of cost of borrowing? And what has happened, you've seen rates come down, right?
Well, very slowly, but then...
Actually, rapidly. No, rapidly. No, I tell you that. I mean, look, where are Treasury bills today? They're somewhere around the 3%. In fact, they've actually fallen to about 1-point-something percent, but about, say, 3 or so percent. There was a slight increase in the last auction, but, you know, they are firmly in the sort of single-digit level, which prior to that, that has, I mean, inconceivable. I mean, the last time we had single-digit Treasury bill rates was when Governor Soludo was at the central bank. So we've had 10 years of very high rates. So to my mind, what's been done, and what I like about it is the fact that it's not something that you say, oh, it's the CBN has, what's the word, has artificially brought rates down, yeah? Because what they've done is to say domestic investors begin to invest in Nigerian securities. OMO being the open market operations, which is where the CBN uses to effectively manage liquidity within the system. Right? Those securities effectively have been made more or less the preserve of foreign investors. Now, what I like about that is that, imagine, you know, one of the problems we've always had is foreign investors normally want a specific kind of return for the money they invest in Nigeria, right? I won't go into how that began, you know, because I've always felt it was the wrong move, you know, by the authorities at the time when it was done. I didn't think it was right, where your interest rates more or less begin, you have it being set by foreign demand for your bonds. It just didn't make any sense, right? I didn't like it. I thought that was a wrong move to have made, and that came in 2009. Anyway, reality is we're there now. So having this situation where, and what used to happen was, you couldn't bring down your domestic interest rates because foreigners wanted a higher return. And in those circumstances, right, imagine your entire domestic market being distorted by the fact that, oh, a few hedge funds and asset managers somewhere say, oh, well, for us to put dollars in Nigeria, you must give me 13%, you must give me 14%. And because of that, risk-free, by the way, so because of that, right, everybody else in the economy has to borrow at 10% over that.
In other words, they're directing or deciding the direction
of the economy. Now. Yes, effectively.
Takes.
That's where we were.
There are critics, who, you know, especially the rating agencies, who say that this idea of directing foreign portfolio investors towards the OMOs, you know, does not make economic sense at the end of the day in the long term because of the, you know, very low investor.
So in other words, the investors, investors,
very few.
You know, very few. But let me say something. So, and I think I alluded to that. So let's assume the issue was that it will become illiquid, because there are not that many people buying it. I mean, really. Now, if, like I said, CBN opens a window, think about it, that says, anytime you want to sell, I'll buy it from you. Do I need to have 10,000 investors? Do you?
As long as you have
I have a window that allows me to sell anytime I want to sell. So let's assume we were 4 investors here, and I wanted to sell, but none of you wanted to buy.
Yeah. Okay.
Right? There's a window. The same person who sold it to me opens a window, allowing me to sell it back to them at any time.
Okay.
So it sounds to me like you're saying we should like Emefiele's silver bullets.
Oh, absolutely.
Oh, yeah.
Oh, totally. Oh, totally, totally. Because the reality is this.
That's your highlight.
Let me tell you why. No, let me tell you why. No, let me tell you why. It's not about the bullet itself. It's about what it actually means to the ordinary citizen.
Yes.
Okay.
All right? In the fact that ordinary Nigerians, did you ever think 6 months ago that GTB would advertise taking loans at, 15 point something percent? Retail.
Right.
Unsecured. Did you think it was ever possible?
Now, let's just go back to the
Please, no,
drawing.
hang on. I want you to answer that. Did you think? No, hang on. Did you think it was possible? I need you to answer that for the audience. Exactly. That means, right, that something has changed.
Right.
2 days ago, Access Bank calls me up and says, "Do you want a mortgage?"
A mortgage. Wow.
Is that a word?
No,
In Nigeria? Does it exist in Nigeria?
Access Bank calls me up and says, "Do you want a mortgage?"
Did you ask
All
her what rate?
No,
Thank you.
I did. And she said to me 15 to 17%. And I said to her, you know what? I said, tell Herbert, who's a friend of mine, I said, tell Herbert it wouldn't work. It's too expensive.
Right.
Right? It should come further down.
Yes.
And it will. So the reality is that for the first time, it is becoming possible for Nigerians like you to actually have access to credit.
Okay, but also at 15%, 17%, it's still relatively high.
Yeah, that's
How can we come back? Is it possible that we'll ever go back to a single-digit interest rate in Nigeria? And can you break that down?
Okay, so there's some people who are skeptics and say it's not possible, right?
Okay.
In fact, there are people who want it to go back to status quo. You'd hear things like, how can Treasury bill rates be 3% and inflation be 11%? Negative interest rate, all that. We hear all that. But reality is, right, the inflation of Nigeria, the problems that we have, from an inflation perspective, is actually cost-push inflation as opposed to demand-driven inflation. Now, the difference is this. If you have too much access to credit and cheap credit, it means that what? You want to buy more. You want to borrow and buy more. And because you have more demand for something, what happens to the price?
It goes
up.
It goes up.
Thank you. Right? The problem we truly have is that the cost of manufacturing, the cost of production in Nigeria is expensive. Okay? And that is why you find imports coming in, because it's cheaper to import this little widget than produce it in Nigeria.
Correct.
Exactly. Now, how do you bring down the cost of the factors of production? So let's think about what are the factors of production? Power.
Infrastructure, transport, all of that.
Now, to fund those things, to make sure they exist, is why this is important.
Okay.
Because it's supporting citizens as well as infrastructure growth.
That's one. Two, more importantly is this. If you're going to fund things like a road, does a road produce money? It doesn't. Even if you told it, it might produce money. But does it produce dollars?
No.
It doesn't. So, a road only produces naira. Can you say it now?
Yes,
I want you to
like
think.
that.
So think about the Lekki-Ikoyi Bridge for a second. Okay?
Yes.
It produces naira. The reality is that if they wanted to create a fourth mainland bridge, they could easily, using the cash flows of the third the Ikoyi Bridge, to fund the next one in naira at what? An economically viable cost. That is what's important about this.
Okay.
So if you're now able to, think about it. So if you're able to fund your roads, your power, your logistics, all the things that are important at costs that makes sense, that investors can say, yes, I will invest in this. What happens to inflation? You begin to deflate the economy. You then begin to move from an import-dependent economy, right, to one that can export. Thank you, because the cost of producing in your economy becomes what? Economically viable.
Yeah, but let me take you back to the point you made about critics who say that, you know, all of this is happening artificially. It's not organic. When you bear in mind the infrastructure deficit, very huge, about $30 billion in the next how many years that Nigeria needs to be able to meet. And then it's still a monoproduct economy.
The reason why it's a monoproduct economy is because, right, it has been absolutely almost impossible to diversify the economy, because what's required to diversify the economy has not been addressed.
What needs to be addressed
so
then?
one of the things, not because some people say, but monetary policy can't solve all the problems, and I agree to that. You have to address fiscal and so on and so forth.
Yes.
But this is also extremely important. The cost of funding the projects needed to diversify the economy has to be economically viable. There are other things that need to be done.
How viable is it that the federal government, for example, is thinking about dipping its hands in the pension funds, you know, to...
I heard of that. I don't think... Look, let me put it this way. I think my dear senior brother, Erifai, needs to look at this again. So, first of all, let's assume you had 10 trillion of pension assets. Already 80% of that is in government securities. What's left? I mean, really. So the reality is, I mean, you know, what I would have advised, if I was allowed to advise them, is to look at something more in the range of a pan-African bond issue, right? Raising money from different sources, exactly. And I think that's possible. Rather than, you know, the domestic market, because reality is that right now, most of the monies of pension funds are actually sitting with government. Okay,
we do actually have to take a short break now, but we will rejoin Sonny Ayere when we come back from the break. Stay with us.
Welcome back to the morning show. We're still with the chairman of DLM Capital Group, Sonny Ayere. Now, I wanted to touch on a little bit about the policy thrust of the CBN governor, right? Can you just break that down for us here?
Okay, so the central bank, let's say, one of the critics of the central bank has been it moved from what its role is supposed to be, which is a lender of last resort, to a lender of first resort. So you have things like pockets of funds, you know, SME fund, agricultural fund, you know, all kinds of funds to be lent out at single digit. There was the, what's that one again? The Real Sector Support Fund, RSSF, 9%, et cetera, et cetera, et cetera. Now, that is not the role of a central bank, right? And what a central bank is supposed to be is to be a lender of last resort. In other words, you know, when the worst comes to worst, come to me. I'm there to provide what? Financial stability, or, you know, stability within the system. So, to my mind, what the central bank has done is actually allowed itself to revert to what it's supposed to be, which is a lender of last resort, and let the banks, right, be what they're supposed to be, which is the intermediary between people who are putting monies into a bank or which put their money somewhere, and people who need to borrow that money, right, for economic growth, etc. So by being able to put this dichotomy between what is required for foreign investors to, you know, keep the dollar stable, for lack of a better word, and allowing the domestic interest rates to be, that's the word now, to find their economic equilibrium, right, based on, you know, simple economic principles, demand and supply. I think the central bank can now begin to revert to that role it's supposed to do, which is not. I mean, but I'm not also saying that that is the only role it's supposed to do. But it's one of its actual functions, which is a lender of last resort. And I totally believe, right, that even though, like I said in that article, I said the banks and investors, etc., may not like it. Okay, because of course, who doesn't like nice
extra
risk-free rate and all that.
Well, let's bring it to
please.
the ordinary man on the street.
Right.
Yes.
What exactly do all of these policies mean to the trader, to the SME, and what have you?
Okay, there's something in
because many times over the years, the central bank has tried to bring down the interest rates. With no
and
success,
that is
except,
why
of course,
I just love
85.
what you just said right now. The central bank has tried to bring down the interest rate. I like that a lot. And I'll tell you why I do. Is that the central bank, in this case, did not try to bring down the interest rate.
Oh, they did.
It's supply and demand that brought down the rates. Big difference. Think about it. So if, for instance, central bank woke up and said, we're bringing down the MPR, the monetary policy rate, that is, from where it is now, I can't remember, 14 or whatever.
13.5.
13.5. We're just dropping it to 2. And our central bank bringing down the rates. And that's artificial. You see, so think about it. What central bank has done is, okay, so, they say, because the problem has always been, if we bring down MPR, the issue would have been dollar investors would have said, the rate in Nigeria is too low. I'm taking my money out. That would have then had pressure on the Naira, big time. And the Naira would have had to what? Depreciate. Okay? What central bank has done is said, okay, let me deal bilaterally with these bilaterally. So what rate makes you happy, right? We can negotiate, whether it's 10, 12, 13, whatever. Okay, so that's one bucket. Let's look at the other big bucket, which is the domestic interest rate. Now that rate is being set not by the central bank. Central bank didn't say Treasury bill should be 1% or 2% or 5%. It's not them. It's not them that said FGN should be 10 or 9%. It's not the central bank.
Yeah.
That was totally determined by what? Supply and demand.
Right.
That's why it was a silver bullet, in my opinion. Because it is now domestic, it's now set between supply, person that wants to buy,
and
person that wants to. That's it.
You're very, very optimistic about the CBN policy. You really are. And every now and again, the CBN says, look, we are doing our part. We're playing our part.
Yes.
Coming up with monetary policies.
Yes.
But the fiscal policy end of it is where
Correct.
the problem,
may lie.
to lie.
Yeah.
But what are the indicators for you, really, that things are looking up and that they will, in the long term, even get better than they are now?
Like I said, I'm not I didn't say what CBN has done will solve Nigeria's problem. I didn't say that. All right. I said it is one of the things that needs to be sorted out, and at least they found a solution. So at least in other words, if they were being judged, right, by God in future, CBN would say at least I did my own part. Now you can go to fiscal and say, Oga, what did you do? You can go to the other parts of the economy. What did you do? So the point I am only trying to make with this is to say, at least from a monetary policy perspective, they've done their part.
What's holding back the fiscal end of it?
Look, there are several reasons for that. I mean, I think fiscal is also trying. I mean, look, with the increase in the VAT, the finance bill, etc.
Right.
They're also trying to put their own bit together. There's a lot to do in that regard. How much is being borrowed, by the agencies. There's a lot that needs to be put in place at that level, right? And I think it's beyond the scope of this discussion. However, the thing is this, is that when you look at there's no one solution, all right, to a problem, but at least if I looked at this silo, which is the monetary policy silo, at least I can say what you've done here, Emefiele and his team, at least you can say, okay, at least one issue, looks like it's being resolved. So what I see is that you're trying to get the banks to lend, that's the reason why they've increased the loan to deposit ratio. And let me just expatiate on that for a second. Prior, and I've been in banking for a long time, and I've been in commercial banks here, even though I was in the investment banking side, but at least I was able to see what was going on in the commercial bank. Prior, most commercial banks would tell you that lending can never be profitable in Nigeria because Nigerians don't pay back their loans. That's has been the general sentiment. Yeah. And then, you had the advent of microfinance banks. Initially, they were there to fund farmers and, businesses, etc., but kind of now found their way into what? Consumer lending. Okay? Paying school fees, paying for this and this at rates that were closer to 60% per annum, Abaha. 2%, 3%, 4%, 5% per month. What does that come to? Yeah? But the thing is this, guess what? Nigerians were paying. Microfinance banks were becoming profitable, doing consumer lending.
Well, they still collapsed.
Okay? Some do, some don't. So in fact, even when there's a client, there's one we know of where initially there was a bit of a struggle trying to understand Nigerians, payment habits and so on and so forth. But now have come up with algorithms that let you know how Nigerians, let me give an example. You have 3 phones here, as I can see.
Yes.
All right? With smartphones, I can tell that these phones are here right now, this address in Ikoyi. Let's assume these phones come here every day at 8 o'clock and are back at a certain address at 9 o'clock in the evening, every day. What does that tell me? The person is working. Yeah. No, the person is working. You have a job. The phone moves from this address to a certain address, stays there for 8 hours or 9 hours, and comes back to this address Monday to Friday. I can say that this person is truly working.
So, Mr. Ayere, we have about a minute left, and I just want to shift the focus of the conversation to the quote attributed to the Nigerian Finance Minister, Zainab Ahmed, where she said Nigeria has not a revenue problem, but indeed a debt problem. With about 1 minute, give us your closing remarks on what you think that means for the country.
It says we don't have...
We have a debt problem as opposed to a revenue problem.
Right. The only reason why Nigeria would have a debt problem is because a huge chunk of Nigerian debt was moved into dollars by the former finance minister. And I don't blame her. She had to move it at a time because there was, how do I put it? There was a disagreement on interest rates. Nigeria was borrowing at such a high cost of funds where Kemi at the time decided, you know what, to bring down my cost of borrowing, I need to transfer my borrowing into dollars, right? If we had had this system, that would never have happened.
Okay,
Thank you very much for those closing remarks.
Thank you so much.